Welcome to TradeTheNBI.com. This is John. This report is for the 15th of December. Thank you for everyone for all your birthday wishes. Pretty much things went as expected. We were talking about this with the ABM yellow value that we closed off. Just slide that over. Right around that, down at the bottom of the DoFast, 46.57 range, and then I was saying that anything below that, you could expect to be short. Well, we popped up just briefly above it, but it wasn't able to sustain it, and immediately we saw the drawdown. What we were noticing was the NASDAQ was far weaker, and it was just a matter of I was looking for orange continuing to rise, and that cross right there of cyan on the DOC over green, both negatives, and then it compounded with the steel also dipping at the same time. And well, we had 46.13 was a previous algo level that took place from the last pivot up, and this is one of those things where as we head towards the option expiration, the final one of the year, you had a couple of these rip-roaring moves, but that doesn't necessarily allow a lot of the big guys to get their positions completely filled when we dip down towards the 50%. It's nice and looks good, but that's all it was. And then you had consumer prices and that, and this is the same thing that happened well in previous downturns, where economists always miss the escalation aspect of a slowing situation. And as I've talked about, when the issues of virus and that continue, or variants, the fear that instills usually causes people to make initial purchases, but then there's a freezing aspect when it comes to investment in that. And small business, for the large part, throughout most of this epidemic situation, have been crippled in large part, and they are the driving force. And when you don't have enough people generating new jobs and or creating opportunities, it has a ripple effect, and it starts to accelerate. You see from the Dow here, also weakness developing, and then like we were pointing out, the NASDAQ was worse overall because it had the white NBI, and it also had led with the red NBI above magenta, and those are all weak signs. So when we saw the white happening well early on in the peak coming through here, we were expecting that we could see some weakness within that, and bought it quite a bit, from the lows, but still presented exactly as expected. And it's going to really be an interesting one to see how adaptive things are, because as you see, well, we had even the tornadoes, and some of these things have real world implications for at least America in some sense, but it tends to grow broader, because with supply disruptions, you had people buying things in bulk to acquire them, and that creates a forward-looking decline. So I talked about a month or two ago about the rapidly slowing economic situation, and now we're seeing the effects of that starting to really take hold and capturing some people's attention. Now, that said, you get places like the Eurozone, even worse. The dollar is to continue to show strength because the Fed being forced into its tightening phase within a weakening economy, but you have a near stoppage in the Eurozone, so that, relatively speaking, still makes the dollar better off. The gold hasn't made the turnaround. Well, some of that's a drawdown because there's going to be a need for some of that capital. You would expect that if there was really positive news, you'd have cryptocurrencies rising and things by that nature. But this expectation is drawing a lot of money back to safety, relatively speaking, which is interesting because you're really getting negative yield on a lot of that with the producer price index readings that we saw. I mean, this is the worst inflation ever recorded, really, because if you use the same standard that was done back in the 80s, it is a record. But of course, they keep adjusting it to make it less notable and less impactful, as well as less relevant, because it doesn't really reflect what's actually taking place. And I think by virtue of that, you're going to see oil rise just by its nature, because the nations that utilize euro dollars and that, they really are going to be paying for the inflation devaluation of things, and that usually forces the price to rise, as it has always within these kinds of situations. So I would expect oil to continue to rise, and even where it's at, it's already created elevated situations, and it's only going to get exacerbated. Those are just macro understandings of things that don't always reflect in our tighter time frame look, but from a broader aspect, it's worth noting and being prepared for, because here you have the cryptos, ETH, Ether, staying below that 4,000 level, and kept having difficulties right around the 4,500, and still held up fairly decent relative to Bitcoin, which had seen much greater implosion when we had that period where there was a lot of liquidations and that, and then we talked about these areas. And I was saying this morning, even for today's, the day before for the report, that if you didn't get some buyers holding it up in this 47,000 range, a long way down before you get to the next levels where the algorithms would more than happy to take any weakness and drive it further. So that's worth noting, and so it's a question of whether or not you have just new money that wants to pile into it at this particular stage. And late in the day, we finally saw some people jump at that, and that's lifted Bitcoin here back up to just about that 48 level. That was pretty quick, and again, that's usually on much weaker overall volume to what the selling pressure had been. When we turn to the ES from its standpoint, 50K, it started in its weakness all the way back up here around the 87 level, and continued all the way through here. We just now starting to get a turnaround set up, but within that, we've already got MBI white riding above. Now, the caveat to that one is you still have magenta over yellow, and when those tend to happen, oftentimes what we see is a turnaround of magenta up, so you get a rise before it has an impact, unless we get an immediate dip of magenta under that yellow, which that would certainly cause much more pressure. And that's why I always look to our DSC to see whether or not we get a spike up of our cyan over green. In this case, they're just remaining flat. We would see some more weakness, though, if steel continued to dip below and cyan rose and it crossed above it. But improvement in the shakeout, that could be enough to hold it off. But notoriously, this is weak when you get white MBI leading under 50%. I tend to view that as more bearish than anything. So we'll have to see if we can get a pop up. Here we are at the end of day, but if we go back to the start on that 5K, you can see where this all really started. Pretty weak early. We had early breakout towards the end of the day, and that led to peaks, but then early on, post-market sell signal came in, and it pretty much stayed with that. We had a couple of decent little buy pops, but every time they started, white MBI leading on that one, it's just a matter of waiting for that tilt down. And that occurred below the 50% range, and that led eventually to that move to the 0%, which is what you would expect that to eventually lead to. And once we had that one, ended up with another white spike on that brief move, again back to the same 50% on our more Fibonacci lines. And as soon as that crossover takes place with that magenta under the yellow, yeah, short that, and boom, there it goes. Went straight down from there. So it's pretty straightforward, and Pink captured it rather nicely in any little pops that occurred in there. It's just a matter of waiting for that magenta back underneath to attack again, moving to the 0 point. A little bit later on, though, as the day drew on, we started to get shakeout moving more towards even neutral, and then getting its turn to the positive. Pink went green, right at about the 50% line, and continued for a pretty decent rally to really cut the losses in half, and then we ended up with another sell, and that was because we had a series of these positive extremes that needed to be filled that took place when we dipped all the way around that 46.18 range, which conveniently, if you look back to the daily, 46.13, you're right at that threshold again. So again, that one becomes easy because we have both the 76% and at 46.20, and then you have obviously the 46.13, which was that algo level. So above those, it's going to be an interesting one to just follow the readings, but below certainly is going to create more selling pressure, and that's going to be relevant as the weekend goes on. So going to be some exciting times, and there's a lot of interesting potential economic situations that really are going to supersede some of the excess cash that exists out there as people realize they're going to need to move to safety or some other competitive hedge that doesn't expose them to exacerbated risk, because there's always a danger of miscalculating how quickly things slow down, and it's something that typically happens when economists view things as modestly slowing because they miss the psychology of how people behave, and that's kind of really what happened in 08, and that just a huge miscalculation as to the effect that it would have, and particularly when it comes to rising rates and people's affordability and ability to withstand price shocks. Really going to be interesting to follow how that escalates things and whether there's a deterioration, how rapid that deterioration is. So we will keep an eye out for it, as always. Got a lock on it, but our readings will give us the lead. So as always, I will continue to update you on the Skype chat. Trade well. I'll talk to you later.